Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Hello and welcome. Now before I start, I just want to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, Euro-dollar, a second bullish white soldier and follow-on high from the previous session's immediate countering bullish engulfing pattern. It was an interesting pattern as both the open and close were above the dark blue neckline, currently at 116.77, of the significant combined June to July head and shoulders top, which also had a double top formed from the head and the second shoulder. It was also a first close over the October 21 high at 116.92. Further below we have the combination of the green short medium moving average, currently at 116.10, and the November 2020 low at 116.02, with the 2019 high just underneath at 115.70. Further up we have nothing much until July's high at 117.88 and June's high at 118.29, and the downtrends in between those two, basically 117.98 and 118.01. Okay, so recently I have believed the large combined head and shoulders top and double top patterns seem to be the more dominant patterns here. And I'd previously given targets for these patterns below of a head and shoulders primary target X1 down in the 113.10 zone and a harder to reach secondary target X2 down in the 111.41 zone. For the double top, a primary target down in the 114.55 zone, something we've already achieved, and a secondary harder to reach target X down at 113.22 zone. However, all these are now under threat as we are moving above the dark blue neckline. Okay, so I recently realized that we have another pattern building up, a late June to date possible bright red descending expanding wedge pattern, currently 112.14 to 117.54. I'm now watching this pattern with great interest. Finally, as I've now said repeatedly for months and months, we are set up with 7.5 months of this year gone by for a possible annual key reversal pattern here. Thus, if we close on Wednesday, the 31st of December 2025, either over 110.36 or under 103.53, then we're beyond. Anything in between and we'd have a lesser outside year pattern. I'm at this stage not even going to contemplate what the result at the end of the year will be, just that we are set up to achieve one. Though right now it looks very much like an annual key reversal up. Now so far today, back down a bit to rest on top of the dark blue neckline, but below the October 2021 high. Cable, aka sterling against the US dollar. A third bullish white soldier and further break above both the dark blue upper trend line, currently at 134.11, of the early July to early August descending expanding wedge pattern, which is currently 129.47 to 134.11, and the green flatlining short medium moving average, currently 135.04. This break above the descending expanding wedge pattern now gives us a primary target X in the 136.78 area and a secondary harder to achieve target X2 up in the 137.88 area. It also forces the retirement of the one remaining and harder to reach secondary target X1 down below at 129.40 for the move down under the neckline, currently at 132.60 of the recent mid-May to late July head and shoulders top. This move up was also a move higher through and almost out of the congestion between 134.83 up to the September 2020 high at 135.81, containing within it the green flat-lining short medium moving average, currently 135.04. Now further overhead, beyond 135.81, we have congestion at 136.21 and the February 22 high at 136.43 before we reach target X at 136.78. Finally, much like Euro-dollar, we are set up here for this market to make that rarest of patterns a possible annual key reversal. Thus, if we close on Wednesday, the 31st of December 2025, either over 127.29 or under 125.11, then we're beyond. Anything in between will have a lesser outside year pattern. I'm at this stage not even going to contemplate what the result at the end of the year will be, just that we are now set up to achieve one. Though it does look like we are moving towards an annual key reversal up. So far today, I test up through the congestion at 135.81, but then back down as the market has not established itself over it just yet. US dollar against the Japanese yen. A second bearish black crow yesterday and a follow-on from the previous session's bearish harami. The market was again capped by the Fibonacci congestion at 148.68, though the next congestion of note is the combination of the slowly declining gold long moving average, currently 149.27, with just above the 50% Fibonacci line of the July 23, July 24 move at 149.61. Looking below, we have Fibonacci support, and it has recently been quite good Fibonacci support, I have to say, at the 61.8% Fibonacci line of the July 23 to July 24 move at 146.69, followed by the rising green short medium moving average, currently 146.16, and a declining mauve medium moving average, currently at 145.47. We're also now still in between the dark blue middle tine below, currently at 144.78, and the dark blue upper tine above, currently 155.38, of the important, large, shallow, and longer term early July 24 to mid-January 25 bearish shift pitchfork. This is one of two major patterns in operation here. Now the other one is the broken bright red mid-January to mid-June descending, expanding wedge pattern. This had a break higher in mid-June, though it was more like a stroll higher. The primary target up at 150.5 was reached 2 weeks ago, though it still has live a secondary, much harder to reach target X1 up at 158.85. So far today, well, a really interesting move already. A break lower from the open, down through the Fibonacci support 146.69 and down to the rising green short medium moving average, currently 146.16, before pulling back up, though not back up as yet through the Fibonacci line at 146.69. It nevertheless has set up the opportunity for this week to be a possible weekly key reversal. Thus, if we close tomorrow, that's Friday night, either over 147.72 or under 147.36, then we're beyond. Anything in between, and that's actually a quite narrow range, but anything in between, and we would have a lesser outside weak pattern. US dollar against the CNH, the offshore Chinese yuan. A second bearish black crow yesterday and a follow-on lower from the previous session's bearish engulfing pattern. This move lower has already set up this week to become a possible weekly key reversal. Thus, if we close tomorrow night, that's Friday night, either over 718.86 or under 718.81, that's a really narrow range. But should we close either side above or below that, then we would have a weekly key reversal. Anything in between, and we would have a lesser outside weak pattern. It's like threading the eye of the needle if you do that. The top side was still capped by the congestion between 719.64 to 719.91, consisting respectively of the May 2020 high and a 50% Fibonacci of September 22 to April 25 move, whilst below the market pierced the support seen for the last week and a half of the flatlining green short medium moving average, currently 717.89, though the market ended up closing right on this yesterday. Further up we have resistance from the slowly declining mauve medium moving average, currently at 721.38, and the dark blue neckline extension, currently 721.65 of the late August to early November 24 reverse head and shoulders pattern, with just above this the congestion at 722.88, which tied in with the lows from earlier this year between January to March. Now looking below, we have the bright red trendline extension, currently 715.23 for the mid-January to late April descending triangle, just ahead of further Fibonacci supports at 714.95 and 714.48. That can actually be regarded as one single congestion zone. Finally, a strategic observation once again, and one I'll continue to making here. Please note how the long moving average, currently at 724.67, has been, despite some up and down waves, relatively flatlining for quite a while. So that if prices do stray away too far from it, then they seem to be brought back in towards it, and that can apply in either direction. Now, so far today, a further move lower, with the market now starting to establish itself under the green short medium moving average and starting to look further lower, down at the bright red trendline extension below. US dollar against the Brazilian real. An immediate countering bullish thrusting pattern of sorts yesterday, after the previous session's significant bearish engulfing pattern. We now have a second consecutive close below the previous support afforded by the combination of The purple May 24 today uptrend, currently at 543.61, within a congestion zone made up from the 50% Fibonacci line of the April 22 to December 24 move at 544.57 down to 540.16. This congestion also contains a dark blue neckline extension to the June to September 24 head and shoulders continuation pattern, and that's currently at 542.68. All this is now turning to become overhead resistance. We thus had the lowest low since August last year. Now overall we remain in between the showrunner for this market since April, in between the overhead bright red upper time, currently at 554.26, and the bright red middle time below, currently at 527.90 of the mid-December 24 to mid-April 25 bearish Andrews pitchfork. Looking below, the next congestion is formed from the August 2024 low at 537.59 and the July 24 low at 536.76. Yesterday we tested and rejected for now the August 2024 low. US dollar against the Mexican peso. An indecisive doji cross yesterday, but verging on being a small bullish arami. That's after the previous session's counter to the counter bearish dark cloud cover pattern. The base of the move was once again the very significant pairing of the February 2020 low at 1851.71, along with the 61.8% Fibonacci line, the big old April 21 to April 24 move at 1850.81. Whilst the short moving average currently at 1868.18, which is something I don't normally mention, provided some interesting overhead resistance in recent days. I'd also have to add that the support below was assisted by the combination of breached bright red upper time, currently at 1847.24, along with the breached many times early May to late July dark blue bear channel, currently 1823.66 to 1847.24. Further up and now entering the frame is the slowly declining green short medium moving average, currently at 1881.07, and that's within a congestion band above between the 50% Fibonacci line for the April 24 to February 25 move at 1876.94 and 1885.40. Now so far today, a seeming reactionary move back up to testing the overhead short moving average right now once again.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.